Welcome back to Fast Money. Do not forget, we have got a special supersized edition of Fast Money coming your way tomorrow and all next week. We'll be answering all your burning trading questions. So hit us up on Twitter. Send us a video with your question at CNBC Fast Money. We'll try to answer it on the show. Moving on, news of Apple getting to the car business, driving that stock 3% higher today. So what do we know? What does it mean for Apple? Let's get to Josh Lipton for the details. Hey, Josh.
So, Melissa, it's easy to understand why there is so much interest in this story. Just imagine Tim Cook taking the stage there before a live audience and introducing an Apple car. New reports suggest that could be on the way, that Cook and Company could introduce a self-driving car by 2024, in fact, with its own breakthrough battery technology that would apparently lower costs and increase the vehicle's range. It's easy to understand why Cook could be interested in developing a car. The auto industry represents a big potential opportunity, a $2 trillion market. On the other hand, we know there could be challenges. For all the excitement and headlines, the auto industry is a low-margin, capital-intensive business. Still, Apple rallying today, now up nearly 80% so far this year. And check out two companies that make LiDAR sensors, a core component for self-driving cars. Velodyne and Luminar saw sharp gains, as did, by the way, Magna International. Apple reportedly previously engaged that company in talks about manufacturing a car, but the talks apparently petered out. Back to you all.
All right. Thanks, Josh. Josh Lipton with the lowdown on the Apple car. For more, let's bring in the number one analyst, Apple analyst, Tony Sacconaghi, senior tech analyst at Bernstein. Tony, it's great to speak with you.
Thanks for having me, Melissa.
So we saw the stock move higher by 3%. Why should investors be excited about the prospect of Apple getting into the car business? It seems like, some analysts say it's a call option. It's not going to take on the manufacturing risk, but at the same time, it does seem to be outside of its core competency.
It does, but many people said that about phones when Apple got into it, that, this is a low-margin, hyper-competitive business, and Apple ultimately wouldn't succeed in that business. And obviously, we all know the story there. So Apple is a company that has not been afraid to enter established markets. This is a huge market, as Josh alluded to. And they have an ability to create a premium product that consumers want. And that premium product and premium price ultimately leads to better margins. So there is precedent for Apple doing it. It certainly doesn't mean that Apple will do it. This Project Titan, which is Apple's internal initiative focused on the car industry, has been going since 2014. So we're now almost 7 years into focused resources. Apple's known for dedicating resources to things and then ultimately deciding to do it or not do it or do something different. So we certainly can't be assured about if and what they might do. But there is ample precedent for Apple getting into low margin businesses and getting in them late and creating a leadership position.
Yeah, it often doesn't have the first mover advantage, even though it has a dominant position years later. Tony, I'm curious, though, you cover Tesla as well. So is an Apple car, let's say Apple is successful with its car, is it necessarily a loss of market share for Tesla?
No, it's not necessarily. And look, I think we and most people believe that Tesla over time likely will lose share. Tesla has over 20% share of the EV market today. There's no traditional car company that has more than about 10% share. But it's a huge market, and that's the most important thing to note. Today, the EV market is a little over 2 million units a year. Over time, that's going to go to 50 and then ultimately closer to 100 million units per year. So even if Tesla's share went from 20 to 15%, 15% of a huge market, a 100 million unit market is 15 million units. So, there's a lot of market growth there. Clearly, the incumbents, the traditional, ICE vendors, as they're known, are most at risk for losing share from many of these new EV startups. But the EV market is going to grow at 20% a year for probably the next 20 years. So there's plenty of room for many people to grow, even if Tesla does lose share.
Hey, Tony, it's Tim. So, right, that's a high growth market, and it makes sense. And you outlined where they've done this with hardware, so to speak, in the past. But that's really my question. Hardware or software services / for Apple here as it relates to the auto industry? Because it seems as if they can play a major role here, and maybe even on the battery technology, but more around software services, operating system. Would that make Apple shareholders more happy? Yeah,
I mean, even in low margin businesses, Apple has found a way for it to be capital light and to generate attractive returns. It's difficult to know. I think in 2018, Tim Cook talked a lot about autonomy and self-driving as really being Apple's focus. My suspicion is maybe they feel that they've developed something or in the process of developing something novel on the battery side. And ultimately, either that is the impetus to build a whole car around it, or maybe that will be technology that they could ultimately, share or license to others. But Apple has sort of a unique engineering culture where engineers work on things for long periods of time. Many of those things never see the light of day in terms of products. And I suspect that Apple has buckets of competency. I think autonomous driving is one. It's well documented that they've been testing cars. It sounds like there may be some breakthrough technology on the battery side. How they ultimately choose to deliver that remains to be seen. But to answer your question, investors have rewarded Apple around services. So a high margin product or one that can have services, high margin software type services attached would clearly be more welcome by the investment community.
Tony, great to get your thoughts as always. Tony Sacconaghi of Bernstein.
Thanks for having me.
Guy Adami, let's pretend we didn't know about the Apple news. Let's pretend we're revealing it right here, that Apple may be reportedly looking at manufacturing a car of some sort with a partner, et cetera, et cetera. What would you guess the move on the stock would be?
Yeah, it's funny. I would have guessed lower. I mean, and I'm going to be honest. I would have said, you know what, market's going to beat them up for this. But we're in an environment now where seemingly news like that gets rewarded, and maybe it's right to get rewarded. And oh, by the way, and it's never going to happen, and I'm going to get at it again twice in one show, but for $40 billion, they could probably buy Ford and come out with the two iconic American brands partnering up for the 21st century, and it would be a home run for everybody, I bet. But with that said, in terms of the stock, 137.98 was the high in September 1st. Dan Nathan has correctly said it's the best-looking chart that he's seen for a while now. I think it probably gets there, and we'll see what happens at 138.
Shepard Smith here. Thanks for watching CNBC on YouTube.